And then we've got the CPI number. Is that potentially going to be something of a party spoiler, especially if it is on the hot side, if it does suggest that inflation, especially the stickier components, remain stubborn and entrenched? Or is this going to be a market-friendly number?
So the consensus is 0.6 month over month on the headline and a little bit less than that on the core. I think anything hotter than that would probably be unsettling. That's been the name of the game these days. Not to suggest, though, that if it's better than expected, that's going to be some release valve. The Fed has been very clear that they want to see a series of lower lows. So we're going to need more than just one better than expected print to bring back this notion that the Fed can either step down quickly or move to pivot mode, which we think is still very, very far off. But there's no question that inflation numbers, whether it's CPI, PPI, PCE, they can be market moving if they're outside the consensus.
Yeah, indeed. And again, just to recap for viewers, Liz, headline looking for the number that ease back to 8%, core to about 6.5%. If that number comes in hot, though, then that I think that's another issue. But very quickly, getting back to the midterms, if we could, in some hotly contested and pivotal states, Pennsylvania, Georgia, I'm thinking it could be a wait of days, could even be weeks. I don't know. The narrative around midterms for people who like to look back at history is, look, since the World War II, for the 19 midterms we've had, the market is always up in the 12 months after, right? This time around, though, with the Fed hiking as aggressively as it has been doing, are things different?
Well, not necessarily. Yes, that is a stat based on history. That said, the action in the market so far this year, up to today, the election day, has not mirrored what has more typically been the pattern. So we are bucking the trend. That said, to go a year out from now and say the market has a decent chance of being up, I wouldn't disagree with that. We're at the recent low, we were down 25% in terms of a maximum drawdown, 35% in the case of the NASDAQ. And just for what it's worth, if we want to throw some historic numbers in the mix, when you're down 25%, 90% of the time, the market has been up from those lows a year later and 2 years later. So beyond just midterm election statistics, history is on your side. But that doesn't mean the near term won't still be choppy, volatile, and maybe more weakness to come.